It's Equity News on Equity Access, your cross-section of the stock markets and of developers in the Zimbabwean economy. A fantastic evening it is to you. Thank you for joining us as we broadcast live from Halfton Studios. I'm Ibn Mabunda. Let's get started. As the RTGS dollar continues to weaken, government has announced fuel price increases across the board. Pump price for petrol is up 5.8% to 5.29 RTGS dollars per litre. Meanwhile, diesel is up 3.7% to 5.07 RTGS dollars per litre. This follows the removal of government fuel subsidies last month by the Reserve Bank of Zimbabwe. This is the third time the government has raised the fuel prices this year. Hospitality concern Rainbow Tourism Group reports 131% growth in revenue in the first 5 months of 2019. This was spurred by a 15% growth in foreign revenue from $3.7 million to $4.2 million against the comparative period last year. RTG also spent $1.8 million on upgrading its Bulawayo Rainbow Hotel. This is according to a trading update issued by the Chief Executive Tendai Madzivanyika at an AGM held at the Rainbow Towers this afternoon. Let's have a look.
Revenues in the first 5 months grew to 25 million, up from 11, which is a 131% increase. Now, this is very close to the full year revenue of last year. And this is for 5 months. Quite interesting. One would wonder where we will finish the year this year. Foreign revenues, again, have grown to 4.2 million, up from 3.6 million, which is a growth of 15%. As I said earlier, this is a very important number because this is a real measure of how we are doing in terms of, real money. And so it's a 15% growth, and it's exciting because we know that the high season for foreigners starts in June into July and up to about September, October. So it's exciting indicators for this year in terms of our foreign revenue ability to generate it. RTG virtual revenues, as I discussed earlier, RTG virtual grew from about 38,000 to over 500,000 this year. Wow, 1,000. Revenues in the first 5
On the sidelines of the AGM, we also had an exclusive interview with the Chief Executive where he explained the input of the group's virtual initiatives, mainly Exotic Travel International, Heritage Expeditions Africa, and the Gateway app. Let's have a look.
I can tell you ETI is a business that we have established in the United States. It's a company that will be operating out of New York City, Manhattan. At the same time, it's also going to be out of Delaware and also out of Colorado. So really, it's a business that is going to be marketing the world to Americans. As you know, America is the number one, prosperous country in the world. And to be able to have a business in there, I think is great. So far, we're already seeing a lot of activity in terms of creating packages. We estimate that this year we'll probably generate a net revenue to ourselves upwards of $3 million. So far,
From the ETI?
From ETI itself. Okay. $3 million net into the business as net sales.
Okay.
And then obviously you then take out your costs as well. But we are seeing ourselves generating close to $1 million this year from that business alone. So we're excited about that. It needed very little capitalization. In fact, our people are working from home, and that is what is nice about it. It's 100% owned by RTG. It's registered as a foreign company, and so obviously there are no worries in terms of externalization and things like that, because we will have to remit all the dividend and everything back to Zimbabwe. I can tell you ETI is a business that we have
be it in Harare as well as the
United
Victoria
States.
Falls area.
It's a company that will be operating out of New York City, Manhattan. At the same time, it's also going to be out of Delaware and also out of Colorado. So really, it's a business that is going to be marketing the world to Americans.
Now, when asked about the increased competition in the sector, this is what the Chief Executive had to say. Let's listen in.
Look, you know, we did an occupancy of 61% last year. That is quite healthy. We feel that there's enough space for more players. In fact, the more, the better, because then it tests us to say what is our mettle. It's good. Competition is healthy. You know, I used this example with some people not so long ago, where I asked them, what do you think is the largest hotel? Where do you think is the largest hotel in the world? Nobody could tell. There was a lot of guessing of Vegas and whatnot. But the largest hotel is actually in Moscow. And it has 7,500 rooms.
Okay.
Now, my contention is that if you look at all the rooms in this country, they don't add up to 7,500. And yet there's one hotel that has 7,500 rooms. In other words, we're so all too small. I believe in co-opetition. And this is the thinking behind the RTG virtual model, to say, let's have partners that are in the same space. They also provide hospitality product, but let's give them access to markets. And you'll find that when you do that and you say, let's grow the pie together, and then you compete from an expanded pie, I think it's fine. I have no problem with that. You see, I don't believe in blood on the wall competition. I believe in cooperative competition, where we build value and then compete on service. We compete on, you know, delivering value to the customer, but not to say we mustn't have competition. I don't believe in that. So we think we have sufficient strategies to move our product from being just acceptable product to preferred product.
Now, lastly on RTG, just to get a historical perspective of how the corporation has performed in 2018, they posted revenue of $34.31 million against profit after tax of $5.01 million. Then, of course, if you juxtapose it to the prior performance in 2017, $27 million revenue against profit after tax of just $100,000. Now, CBZ Holdings declared 6.5 million RTGS dollars in dividends to its shareholders. This comes after CBZ Holdings posted a profit before tax of 159% in growth to $72 million from $27 million recorded in 2017. And here we go again. Ethiopia is experiencing a total internet shutdown because authorities say they don't want students to cheat during exams. This concludes our evening news bulletin. Up next is a news review. Don't go anywhere. Welcome back. It's time for news review, and with me in set is economist Tinashe Kadu. Tinashe, good evening and welcome to the show.
Good evening, Eben. Good evening, viewers.
Fantastic. Now let's get the ball rolling. First and foremost, CBZ declaring a dividend of 6.5 million RTGS dollars. What is the relevance of that, and as far as the corporation is concerned?
If you look really at the performance of CBZ in 2018, it was actually really impressive, and I think with that huge profit, and I think it was actually number one in terms of ranking in terms of all those banks profitability. So CBZ, I'm just really saying that it was number one bank in terms of profit level. So declaring a dividend, I think it was actually inevitable, especially in this environment where we are experiencing high inflation. Sometimes when you make huge profits, you have to reward your shareholders, and you make your shareholders more comfortable and more happy.
I realize. Now let's talk about the RTG. They had their AGM this afternoon, and unlike all the other AGMs that we've actually witnessed, this actually had a significant number of shareholders coming in. I think this year alone, I think they hold the record for the most attendees. Now, key to the AGM was the fact that they recently declared a dividend of $1 billion, which also had a forex component where that is concerned. What is your comment with regards to the dividend that has been declared by the corporation?
For RTG, actually, it's one of those first companies or listed companies that declared a dividend with a foreign currency components. Backing that, it's actually on the backdrop of a very impressive performance emanating from a successful restructuring exercise. If you look at RTG performance over the past couple of years, it was actually a company that has been struggling actually in the red in those 2 years. In 2014, posting a profit of negative 2.19 million. Then you see in 2016 there 3.11 million. Then in 2017, when this restructuring exercise started maybe to bear some positive results, we have seen profit trending upwards 0.11 million. Then there in 2018 we had the massive 5.01 million profit. So what's happening there is it's actually a company that is actually saying thank you to shareholders for being patient with us during all those years when we are restructuring our business and actually trying to put the business on a strong growth footing. So I think it's impressive there, and it's actually a good act by the company to declare those dividends in US dollar component as well as in RTGS dollars.
Now let's talk about the $1.8 million investment in refurbishing the Rainbow Bulawayo facility, as well as further prospects with regards to the refurbishment of the Harare Rainbow facility. Now they're looking at refurbishing about 180 rooms by 2020. How important is that to the group?
If you look at the hospitality industry, it's actually a sector that is, cutthroat, competition. There are other players actually who are actually, penetrating, that space as well. You look at even the likes of Dawn Properties. You look at Old Mutual. You look at even there are so many, other players looking at, penetrating that sector. So it's actually, a company that is, trying to modernize the existing infrastructure such that its hotels and all its services becomes those services of choice among its clients. So I think it's a good initiative, as well as its drive towards all those tech driven solutions.
Let's talk about those.
Harness more clients and actually protect its bottom line as well as its share of the top line as well.
Okay, so here's the company that is actually expanding its footprint into the virtual market. Yes. They have their ETI project that is operating from Manhattan in the United States. Then they've also got another one that is called the Hexa that is running across the continent, compounded by the Gateway app, which according to the most recent stats for 2018, it had 5,500 downloads, 700 partners, generating 90,000 US dollars in revenue. How important is their IT initiative to the progress of the corporation?
Those even actually they are impressive numbers being posted by Rainbow in terms of that space. But if you look at the future of business, e-commerce, that's the future. Everyone is going digital, everyone is going technology, and technology is the future of business. So I think what they are doing now, they're actually forward thinking, looking at what's happening in the market and moving ahead or together with the trends in the market. Everywhere you go, everyone is now doing his business online, his business doing, using technology and tech-driven solutions. So I think it's actually a good initiative, and it will help, cement its presence, as well as enlarging its customer reach.
I think this is actually a stock to buy. Now, on to Zera. This is the third time that we're actually seeing fuel price increases. Very quickly, what is the relevance or the importance of such a development where, this is the third time that we're actually seeing fuel going up?
Seeing fuel going up, I'm sorry to say that, but to me, I view it as a sign that the interbank market has failed, to provide the results that we're expecting as a nation. If you look at it, when the government, actually, floated the interbank rate, as well as, floated the purchase of those fuel. Remember, those fuel players, they were ring fenced and they were being given, forex at 1:1. Then the government revoked that policy, opened up that market, and they said that those forex, those fuel retailers, they now access foreign currency at the prevailing intermarket rate. And if you look at the intermarket rate, what has been happening over that period of time, we have seen the rate, depreciating or in a free fall. So what we are seeing, those are the players now reacting to what the market is dictating for them. There is no way they can run to. They need forex to import fuel. So what they have to do is to increase, the price.
I realize. Now, thank you to Tinashe for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock market. Please stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anisu Chimbumu, and joining me today is our Chief Analyst, Respect Gwenzi. Respect, how are you doing today?
I'm doing just good, and you, Anisu?
I'm all right. Let's just dive into the markets quickly. Today we did have about 20 counters that exchanged hands. Values were down to $6.5 million, which was a 53% decline. However, our top 10 index has shown some strong comeback again today, rising up 1.41% for it to settle at 186.6 points. Key movements within that index: your cassava going up 2.19%, Badenga adding 3.41%, Citco adding 2.34%. Your take around about what the movements are like today with regards to those indices?
So I think we're seeing heavies rebounding, and that's a sign of further expected growth in stocks. Over the past few sessions, we've seen a bit of volatility, but lately we have come back to that trend of obviously going up again. And this is coming from forces that are outside of the stock market per se. I think the volatility as well, I mean the price increases in the forex market is really having a big hand in inspiring people to continue to push monies in stocks. And so for heavies, they experienced a bit of a slowdown in the in the last few sessions. Of course, they were a bit volatile, but they were generally on the decline. But lately, this shows us that the heavy caps are on the rise again, and basing on the magnitude of gains, Econet recovering 1.87 and cassava there again, and 6 out of the top 10 counters heading in the positive direction. I think it's a return to further gains, so we are likely to see again counters going up. To the next level of gains. I think that's what we're about to experience.
All right, just as you did mention that top 10 had a very good influence in the sessions prior to the profit-taking season that happened. Now it's back up 1.55%, shy of 0.11% of the all-share index, which has been the major driver currently because of mid-tier to low-tier stocks. Now, just to zoom in more on our mid to low-tier stocks. Now, MedTech, which is a penny stock, has had a very good run from about 0.02 cents to 0.34 cents since the beginning of the year. This is a 1,600% growth, 21.43%.
But I think one of the problems with MedTech is that the counters grip. It doesn't trade as many shares in the market. If you look at that 1,000% growth in share price, it has come after only a few shares have been exchanged. When you're looking at a year-to-date basis, the quantum of shares that have exchanged hands is quite minimal. Okay. So even as much as somebody might want to have a share in those stocks, the share cannot, the scrip is not easily available in the market. Okay. That's the challenge with some of these penny stocks, and sometimes holding them, you might end up not even finding a buyer in that respect. So this is also just a reflection of the depth of the current gains. The market has had a serious momentum over the past 1 month, since May. And so investors are beginning to scurry for trying to find value in those counters which are not typically strong counters. Why? Because all the other counters are now almost fully valued. So there's a movement towards those other residual stocks which may be not so good performance in terms of profitability, but they still exhibit cheapness in terms of their absolute price levels. But MedTech is not really a good performer in terms of financials, and undertaking to buy such a counter is mainly inspired by the need to just park your money somewhere in light of the current challenges that are being faced in the economy.
Yeah, you did say that they are not a very good performer in terms of their earnings. Yes, they actually just did in the financial full year of 2018.
Sure.
They recorded their first $1 million profits since 2010, okay, after an 11% increase in their revenues. Just to move on quickly, among the 16 rises that were there today, Edgar's trailed Medtech adding 8.55%, Turnal 6.28%, Padenga and Citgo touched on those. Delta did lit up about 0.21%. Is that profit taking there, or it's still too early
so
to
for
tell?
the heavies, there's been fluctuations over the past few sessions, and so still for some of the counters there might still be a bit of profit taking in those respective counters, but it has not been a gradual decline. It has been like a volatile movement where today you find a bit of gains and so forth, but we'll start to see a sustained growth, I think, going forward from here, mainly inspired by what we're going to see on the forex market.
Okay, forex market, Old Mutual implied rate weakened today 9.33, just a minimal movement there from 9.32. So did the parallel market, selling at 8.6, and also the interbank rate did also have a very minimal move of about 0.4%, coming to 5.889 from 5.88. Do you think that Mutuli having a more controlled monetary policy is going to have him enjoy a better lifestyle, so to say?
But what do you mean by a controlled monetary policy?
He did mention that he wants to have his own currency. The nation has to have its own currency by the end of the year. Most of his sentiment is coming from being able to control the monetary policy, for him to be able to steer the economy.
I get what you're saying. So the monetary policy is basically a preserve of the monetary. I mean, it's a preserve of the monetary authorities, which of course is not within his jurisdiction, but rather the governors. But then of course the RBZ works, I mean, on the purview of the treasury. But in terms of having a fiscal leg and obviously utilizing it to sort out the current mess, I don't think there is that power. Why? Because it depends with the nature of the currency, or the underlying value that is presented by the currency that is presented at any given time. So if for example you are to introduce a currency which is not supported by strong fundamentals, then obviously it results in that currency crashing. I think we already introduced a currency which is electronic and is not faring very well on the RTGS, on the interbank market, and therefore there is little rationale under the current circumstance to justify why the government might feel that it is the right time to push in another or even a supplementary physical note to support the RTGS dollar. Of course, there is a view that the multi-currency regime now has to come to an end to allow for flexibility in terms of monetary. But what is that flexibility that we are demanding? Flexibility in terms of monetary policy means you can influence interest rates, but we have been able to influence interest rates over the past few years. We only couldn't issue out our own, we couldn't print out our money. So I think flexibility or scrapping of multi-currency only brings with it that one extra layer of policy influence, which is money supply. And of course indirectly we were actually inducing money supply through treasury bills. But my own thinking is that treasury bills were carrying an interest because this was money that was being churned in or borrowed from banks. So either way, government had to pay a premium in order for it to get that extra money, and that additional premium or interest is what was obviously increasing the inflation rate in the economy. So now that government will have control, it means that it might inject money at its own discretion. It might push in more paper money without necessarily matching those deposits that are already in the system. I think there is no there might not be such oversight. So these are some of the concerns that are there, and I don't believe it is rational for government to just introduce a currency without having the supporting fundamentals to boost that respective currency, and therefore that means the exchange rate might not slow down in the very short term as people anticipate or place bets against that expected currency.
Okay, well, I was about to ask you a very risky comment from you, but then you have already answered that in part. I was going to say, would the government having their own monetary policy and them having shown such a level of untrustworthiness, would they then print the money within the confinements of a controlled environment or not? But then you've already answered that. So let's just quickly run out of our show. Respect does say that we do need stronger fundamentals for us to have a very good monetary policy. From the Equity Access team and I, we do thank you for viewing, and do not forget to like, follow, subscribe our YouTube, Twitter and Facebook accounts. Good evening.